following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 11 o'clock till noon, every market day. My pleasure to be here, 877-927-6648. Love to hear from you. This is a perfect time to call. We're in a transition mode here. Dow's up 38 at 18,039. S&P is up 2.53 at 2107. Comp index is up 3 at 5,080. Gold is at this point down about $8 at 1178. Silver is down. You've got high-grade copper back in the 2.65, 68 area. And you've got, and silver, of course, is down a little bit. Bonds are up. Let's see, the TLT is at 116.64. Very important. Let me just show you something here. The chart you're looking at, if you're looking at Tiger TV, what a great medium that is, huh? So if you're looking at my charts in the corner here, we've got the 120-minute chart. This is the E-mini, went right to test the 211, 214 area. Resistance in the cup formation, pulling back here. And the daily chart, there's resistance. Let's go to what I was talking about a moment ago. The TLT is the Lehman 20-year iShare Treasury Bond Trust. Gone down to a trough E in the 120-minute chart, having a bounce. Now, I had said to subscribers to my opening call that we're going to be watching 114.70s very closely. That was a little while ago because that was the 200-period exponential moving average. There was a one-to-one with a one-to-one extension from the 138.50 high in the TLT weekly chart. Hit the moving average, 32-week moving average, had a bounce, went to a peak A-. That's what I think we might be looking at here in the market if certain things happen. But let's go on with the TLT. And now you've extended even greater than the one-to-one extension. You've gone all the way to the almost within, what is it, 80 cents? What was the low? Yesterday, the low was 115.26. Within 50 cents, going from 138.50 going to 50 cents. Toward the 200-period exponential moving average. Now, in the alternate count, we've got this as a D, or it's a brand new B to the downside in the daily. Well, let's go to the TBT. Let's go to the TBT, which is, in fact, the ProShares, the opposite. That's gone to a peak E in the 120-minute chart. I could, in fact, make a case. Let me just do that. Okay. I could, in fact, make a case that there was some kind of an instant restart, unconventional instant restart back in early May, and that this really is a D. But I don't want to get too fancy. Everything about it was stochastic at 92%. The MACD still good. Suggests that the bias to the upside in the TBT and yields is continuing, at least in the shorter term this week, and that there should be a push above 52, what was yesterday, say 52.12 or something, 52.19. And there should be a push above that. It doesn't have to be very high, just to get to leg C, then another pullback, and then a sudden pop to D. And then I think, now this is going to be interesting. Maybe this is a rogue wave call here. And then I think there's a chance that bonds might be pulling back. That bonds could be rallying and yields could be pulling back. Look at the TYX, which will be matching very well. That's the 30-year Treasury bond yield. And that's, I'm going to call it a B, possible peak B right now. Leg D in the weekly with a high that's been made yesterday of 32.22 in the TYX. And then there's a good chance that the 32.97 200-period exponential moving average, just as the TBT was looking at the TLT was looking at support. So the yield would be looking at resistance in the 32.90s. All right, that's the way I'm looking at it at this particular point. Critical period we're coming into. Let's continue. And of course, we had some great shows here at TFNN all the way from this morning. 8 o'clock, we were starting with John Logan. Then we went to Larry Pesavento, then Tom O'Brien. And I come in here in the fourth hour, 11 o'clock hour, and hopefully can give you a lot of very important information from my perspective. So let's continue. So we've got bonds at this particular point. You've got the bonds themselves, the U.S. Let's go to the bonds. The bonds are trading down at 149 to 330 seconds. So it's down in the daily chart, but on the day we're up $1.0630. But if you look at my weekly chart, that hit the downtrend line perfectly and is trying to rebound. So this is going to be a very, very important area. Two things that are very important as well is that we've made a peak E top in the monthly chart. And this is exactly the kind of action you want to see if you're looking at a top that has the potential to extend to the downside. And we've already made about a 1-to-1 from the high-end bonds that was made back in January, was it? 166 and 166. Yep, in January. And we've made a 1-to-1 in the move down in March with a bounce in April, straight down. So that says to me that the trend is the most important thing here. And if I'm talking about the Japanization of our bond yields still continuing, a lot's going to happen. You're going to have to get this rising wedge formation, making a push to the 155 area. We're for 149.5, let's call it. But in the next 3-4 weeks, you need to not break down under 146. No, let's call it 145. 145 is the 200-period moving average in the weekly chart of bonds, the continuous contract. You need to be breaking to the upside, break 154, the 9-period moving average in the weekly chart, push higher into the 157, 158 area. Then we can go back to thinking Japanization of our bond use. And that will only happen if we start to hear about earnings week, et cetera, 2 quarters of weak earnings, I believe it is well, I've called it a mini recession for the past couple of months based on the chart formations, not based on the economic data. So let's do this. I want you to look at the dollar. DXY was rallying nicely earlier. It's still holding okay. It's at 95.26. Struggling at the 9-period moving average of 95.51 on the dollar index. And most importantly about it is the monthly chart is still very positive, but the weekly chart has that pattern that could become an H, the lowercase h, or an arch formation. So we're going to watch the dollar anytime between now and next week. If the dollar trades under 94, there's a problem. It's going to probably retest the 93 low that was made back around mid-May. So I think I've covered a chunk of stuff. I do want to get to the EUR-USD. EUR-USD. Yep, it's struggling here. Just as the dollar is struggling to hold its gains and not pull back, so the euro-dollar currency pair is really working very hard to maintain that 9-period moving average of 1.1212. It's down 0.007 at 12485. I hate those figures. And it needs to break above 1.13855 to make leg D or extend today's leg. By extending today, we extend leg C. Okay, very interesting. And I think USD JPY was the only one that I need to fill in here. There it is. Like the dollar, it's trying very hard to hold the low that was made yesterday of 122.45. Peak C, I'm calling it peak C so far in the weekly chart. It's still in the larger trend in an up move. That's all we can say there. Now, I wanted to touch a couple of things here. In the IWM had a very nice rally. It's getting close to its all-time high of 127.13. It's at 126.09 right now, up 10 cents. It is in leg E. So if I go to leg E, I'm going to show you something very interesting. That's the IWM, and that's the Russell 2000 ETF. I want to go to the IWC, which is doing way better. This is the small cap, the micro cap index, the iShares of the micro cap. It's trading at 82.07, had made, I believe that's an all-time high. Well, for the contract, it's an all-time high. And it's leg E in the monthly, I'm calling it leg F for now in the weekly. It could have recycled. But so far I have to call it leg F. And it's leg E in the daily chart with the MACD very good and the stochastic at 89%. And what's really important about this microcap index is it's saying under the radar, regardless of the dollar, regardless of bonds, regardless of deficits, regardless of our trade, whatever, this is the microcaps are ignoring all the other stuff, and under the radar, they are moving to all-time highs via this IWC, which is the iShares Microcap ETF. I wanted to point that out. Now, here's another thing. If I'm looking at in the investors business daily, I was going to do this 2 days ago, and then I ran out of time. If I'm looking at Ambarella, ABA. This is in leg E, possible peak E forming right here, and that's what I was talking about in the 120-minute chart. That's A, B, C, D, E. Just made it an F in a little rectangle formation. If Amber, trading 111.35 down minus 0.159, pulls back underneath, had an open 113. Got to watch that real closely. If in fact it pulls, if it closes under 109, that's 2.5 points lower, then we've got to consider, let me put that in 115.16 with an open of 113. I love looking at these things. I don't even remember what I said. 15.16, I think I said. I'll have to check that out. And we've got open of 111 around number open. That's going to be really significant because it closed below 111 for 2 sessions in a row, 115.16, right. And I'm going to make this red just to say, hey, this is on watch for me. And leg D in the daily, in the weekly, leg G/C still very strong in the monthly. I'm suggesting that there's going to be a sideways consolidation. I've already drawn it in. I said it could go to 115.5, but it better hold 104 because otherwise you're going to go down to the 101, 109, 101.99 area over the coming few weeks if there is a market pullback and it's impacted. But in the meantime, powerful stock, you want to see where you want to buy this, not to short it. Although I do believe it's got 4 or 5 points, it could even be more, could even be 10% if everything kicks in and goes down. But it's not really a short, it's more a matter of saying, where would I like to buy it? Just a different thinking, that's all. Next one is, let me see, what does this say? CYBR, CyberArk Software Limited, trading at 63.02, had a massive move to a peak. I'm calling that a peak E at 71.35. We were going to buy it, and then I said, no, I don't know what the leg is going to be called. Let's just stand away, and we did. We missed a very nice move to the upside, but we also missed being clobbered on the downside. It's trading way under the 71.35 level. This is now 8 points below, and I believe this is leg D. This is one of the reasons why I'm much more cautious now in the market as I see limited upside, but more and more stocks are starting to show that they have the potential to be pulling back. Let's look at the next one, which will be Ellie. I think I touched this the other day. Ellie is Ellie Mae Inc. Electric utilities mortgage network.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and Dow's up 50, S&P's up a lesser percentage. Instead of being up 2.27, it's up 0.18 at 374. So Ellie May, and what we're looking here at Ellie May is, get rid of this. What we're looking at is a situation where there's been a beautiful walk along the 9-period exponential moving average in the weekly chart and recently in the daily chart after the big spike. There's that rectangle that I always draw in. Just immediately I see the pattern, I just go immediately bam, bam, and I've got myself a rectangle. Simple. And then I always say within the rectangle, at least on a shorter time frame, if not that time frame you're looking at, there should be a rally that goes peak A, B, C, and then D is just underneath or right on the left side flagpole high. In this case, around number 67 high of the 1st of May. And then you can go a little higher. But if you go higher, you should still consider that you're going to come back into the rectangle and maybe start to move to the downside. So right here, we're starting to move to the downside with a peak E if there's no new high above yesterday's 67.78 all-time high. It happens to also coincide with a weekly leg E and a monthly leg C, which means this is still very bullish. However, I think it's going to be pulling back sideways, and you've got yourself a beautiful big rectangle here that says on the upside, you've got round about the 68 to 69 area maximum. But on the downside, if you close under 62 in the next 2 weeks, today's Thursday. 2 weeks, then there's a really good chance that you're going to impact the technicals in the weekly to suggest that you could be starting a move down to test the low of 57.77. At anywhere between 59 and 57, I hope I can remember, that's where I want to start looking to see whether it is a buy, because the monthly chart is so strong. So Ellie. Next one is C. I did this the other day, I think, because I couldn't even see it. CBM. CBM is Cambrex. Cambrex has made a peak E in the monthly chart at all-time high of 44.22. Most recent high was in the weekly chart at peak D at a few days ago at 43.66 with a round number 41 low. And there's a peak F in the daily chart at 43.66 on the 8th, just 4 sessions ago, and suggested if the low, or 3 days ago, 41 round number low, if it's taken out, you'll start your arch formation. I'm even going to draw it in here to say limited upside at this particular point. More likely, you're going to see some downside activity. And that downside activity, if you close underneath 40 at any point in the next 2 weeks, then between 39 and 37 is going to be very important support. All right. So now let's go to, I was asked about FEY, which is in the list. I don't believe it is in the top 15, though. It's in the next group. So, but I'll do it because of the question, the Dan. FireEye cybersecurity made a high of 52.48, an all-time high just on the 8th, a few days ago. Pulling back here, I had said that I thought if anyone is long, it wouldn't be a bad idea to take something off for profits. There's that rectangle formation. I think it's going to be trading in sideways move because cyber is one of the sectors that's on fire at this particular point. Pun. And you've got yourself leg D in the weekly, huge leg A in the monthly that failed and went from the almost $100 down to 23, I think it was, 24.81, and now it's trading at 51, which is a very big gain, and it's in leg C in the monthly. So I want to look at this as a potential buy. If there's a pullback over the next 3 weeks below the 46 level, the 9-period exponential moving average, anywhere under the lip of that left side 46.44 high that was made the week of the 27th of February in the cup formation breakout, says to me, watch between there and 41, because anytime it starts to hold there, that might be another opportunity to get in. So that's FireEye, and I think there's limited upside. My suspicion is the 53s will be very strong resistance, even if there's a big rally on whatever it is. And yesterday's move, there was an oversold bounce, and then Merkel said something about Greece, and just everything kicked in. But it was all, to me, it was a fake out move. But I will not treat it as a fake out move. Let me just go. This is a very important issue I want to discuss right now. Having come from a doji low of a trend line in the Chapman wave, having pierced the 9-period exponential moving average, that move, regardless of what it was, price is the arbiter of a trend, not the technicals. It's the price itself, the way it conforms to the technicals or goes against them. Well, in this particular instance, that dashed trend line is the resistance we're looking at right here at 18,053. So we're going to be watching that very closely because it looks to me like it has the characteristic of a single leg A failure. I'll be back straight after this break. I can hear the music. That's great. I'll be back. Basil Chapman, Delta 52.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we continue with our look here at the Investors Business Daily top stocks. And we're going to move on to PAYC, which is Paycom Software Inc. trading at $35.65, down 38 cents. Had a huge move to, you remember in the Chapman wave, what we like to see is peak D. Didn't have a chance to show that a moment ago, but even if you're using it on, next we've got Daryl Martin and using the different techniques that he uses, Nadex, etc. Look what you can add using some of your Chapman wave technique. Going to a peak D. Look how many times. This is the S&P cash on the left, and this is the futures. Went to a peak D how many times? 1, 2, and then the third time went to a D, but it just quickly popped up to an E. So just that technique alone can give you a lot of information, as well as using your time, left side, right side price, time match, inside wedge, etc. So I just wanted to mention that. Now let's go back to the chart we're looking at, which has, the reason why I brought it up is because within the context of this pattern that's happened after the peak D, which made an all-time high at $39.75, having been an IPO back mid 2014, back in the 14 area, having hit 39, pulled back very sharply to the 30s, low 30s, and now it's trading at 35.57. But when you look at the gap, which must have been an earnings report or something like that on the 15th, having closed at 39.24 on the 14th, it gaps down 36.65 is the high, gaps down to 35.03. And it hasn't been able to recover by trading well into the gap. I do not like that at all. So here again, this number on the list is number 5 in Investors Business Daily, and it's just going sideways. It's not breaking down, that's positive, but it isn't breaking upside. So there's another one that's starting to say, getting a little bit toppy here. Now let's go to SWKS, just a fantastic company. I think it's from the Massachusetts area, Skyworks Solutions. And Skyworks Solutions did exactly the same thing. 111.60 high on the 1st of June, all-time high, peak E if there's no new high this week, leg E in the monthly chart, so we've got 3 E's. What was the 120-minute chart? I don't know if I finished that. All right, well, we've got a retracement here to a peak C. Let's see. E, F, and then it went, no, let me do this again. Instant restart, A, B, C, makes a peak D right there at 111.60 at 11.30 on the 1st. Okay, so it's pulled back, hit the 200-period moving average. So now I've got very important, I got key metrics. I can say that Skyworks Solutions looks like it's consolidating, that if it breaks to 111.61 in the next 3 weeks, that'll have to be F/C, because that'll be really good action if it hasn't broken the low of 98 that was made, 98.07 that was made 3 days ago. But it says breaks upside. Then I have to call that brand new leg, if it's not this week but next week, brand new leg F/C with an emphasis more likely on a C, saying that's going to continue higher. But in the meantime, Skyworks Solutions says, hey, I've also had a great run. I just need a little bit of a breather. And I'm going to trade between 107, maybe 108.10. And if I break 102, then I will test the candle of the other day to 98.07. Just a trading range. And it's another one I'd like to pick up if it's market weakness. All this Greek stuff, we're hostage to news now. I hate that. That's just going to mess the charts up a lot. So let me continue. So Skyworks Solutions, same thing. What would be number 7? Number 7 is Avago, AVGO. Same thing. Goes to an all-time high. Wow, this is amazing. On the first was a good day for these stocks. 150.50 was the all-time high. Pulls back, makes a peak D. Struggling now to kind of get back into even 50%, the 145 level, because it's trading at 142.13, down 73 cents. My suspicion is I'll even draw it in here. It's going to make some kind of an H formation, and that H is going to retest the low of 3 days ago. And from the way I'm looking at the chart, 136.51 is liable to break as support. But there's a lot of support in the 134.50s area, because that's the 9-period moving average support in leg. Calling it F for now in the weekly, and Avago Technologies Limited, Singapore software designer. Boy, did I spell all that wrong, huh? In leg D in the monthly chart, still looking terrific. And I would just say that any sharp pullback in the market, and this stock says start looking at it as a potential buy. And what's amazing about the Investors Business Daily, and I've been looking at this since the mid-1980s, is that the stocks in this group, when the market's on fire, these things just scream to the upside. When the market turns down, they also scream to the downside. Losses can accumulate very quickly. MANH is Manhattan Associates. Having made a peak E, it needs to get above 59.98. Same pattern. Wow, they all have the same pattern, except this one goes back to April the 22nd, hit 59.98, has a huge spike up and then a huge give back, and now it's worked very hard to get to F/C in the daily, but way underneath the previous high. And it's the same thing, peak F in the weekly chart. If it makes a new recovery high, I have to change that and have to call it a brand new, possibly a brand new leg B, a G/B. In the weekly chart. So far, holding the 9-period moving average of 54.70s and trading at 57.59, up 9 cents. Looking quite good, but it looks to me like that candle right there, the wick of that candle in the monthly chart and the daily and the monthly, they all coincide to say that that if you were to get into the 58.90s, call it 58.90s to 59.10s, there's a real good chance you will test the all-time high of 59, what did I say, 97, 98. And And then you've got to be very careful. So it's within 2.5 points or 3 points of having a sideways to down move. That's Manhattan Associates, MANH, trading at 57.56, up 5 cents. Oh, man, these stocks, the patterns are repeating. Oh, Valiant Pharmaceuticals, VRX. Did I finish working on that one? Oh, yes. Now, I don't know what to call this. It's very unusual. It made a peak C top that had all the characteristics. And what I thought I would do, I would give it just a little bit to see if it's trading under the 9-period moving average. If it is, I was going to make the high of 239.03 and 239.16 a phantom peak. I'm going to do that now. I don't want to get into it. It's a Chapman wave technique that you use on a look back. And it's to be able to clarify. One of the reasons you want to do that is you want to know the last letter of the wave count, because it gives you such important information. And I don't want to miss out. The MACD failed, the stochastic failed, the on-balance volume has failed. The 9-period moving average has worked as being a repellent. It made a doji peak E in the weekly chart. A G/C still very strong in the monthly. Valiant Pharmaceuticals, branded drugs, trading at 231.62, up 250 right now, but failed to hold so far today above the 9-period moving average at 232.10. I'm looking at this and I'm saying, you know what? Everything about it, the wick, everything about it says that should have been a peak D, and we missed it by cents, just a few cents. That's the Chapman wave phantom peak. And I always change the color to say, hey, look, everybody, I've changed the rule on this particular one. I'm using a sub rule, and that sub rule says Chapman wave phantom peak C. And I'll even sometimes change the color to make it absolutely sure that students of the Chapman wave know exactly what we're doing here. It is a calculated move, and it fits all the criteria for that move, so I'm using it. If you go to it's often that you do get a pullback, and then suddenly you make that missing peak, and if you go to a new high of 246.02 in the next 3 weeks without, say, breaking down a little further here, I would just automatically say, okay, that's the D. We finally got it. But this is what's helping by saying, look, all the other criteria are suggesting there should be some kind of a pullback, and we're getting it. Okay, so that's that. Take that. Now, I'm not in the age yet. I get the Investor Business Daily online every day. I tend to forget it. I'm so busy looking at other things. I love the newspaper. I always get it on a Saturday morning, as well as the electronic. I want to have the page on my hand. I want to have it lying around on my desk, all messy here, and then all of a sudden I see the word IBD 50, and I say, oh, words. And I pick it up and say, oh, yeah, look at that, look at that, look at that. I just want to see it. I want to hold it. I want to scan it. That's easier for me. I'm not of the new age, I guess. Now, if I could just check out what this is, CRTO. CRTO, is that correct? It certainly is. Okay, now here's another one. I believe that should be a G and not a C. I just wanted to give it the benefit of the doubt. I'm going to give it the benefit of the doubt in the weekly as well. That is probably in the weekly chart, not a C, but it's really an F, E, F, that A is underneath, so that's an E and an F. Criteo Core, and it's trading 45.66, trading down 5. And that's the reason why I wanted to be a little bit cautious. I didn't want to make any claims, but you see the way the MACD and stochastic was so beautiful at that high there, which was a recovery high at 50.14, 50.15 on the 18th and 19th of May. Then it pulls back, and the MACD and stochastic pull back. When it spiked up to that leg there, it didn't have cogency, didn't have the veracity of all the technicals. And look what happened. Plop. Bad news today, I guess. So there you are. That's the reason why I put in the alternative counts. It's not to be fuzzy. It's to be as clear as possible. It is so clear to, I should have put it in. I just didn't. I should have put in EFGG/C. That's what I was thinking, but I didn't put it in. Should have put it in. See, I didn't even put an up arrow there. And look what happened, plop. And that makes it clearly a G. All right? And this is same thing, F/C. All right, so it's got a little problem there. All right, I wanted to go through some of those. Now I want you to look at IYT. I want to look at I'd say to subscribers, I'm opening call. There could be a bounce, and that bounce could involve the financials, and it could involve the transportation, which is acting so badly, but has held the down channel support line that I'd drawn in. But I still believe that that arch formation is going to become potent in the next 3-4 weeks, especially if the IYT, the iShares of the Dow Jones Transportation Average, break the support. If they start trading at 151.72 right now, if they trade under the 148's major support and going to the close on a weekly basis under 147, 146 key support, you don't really have anything until you get into the wick, the whole wick of that candle of the last October. So we're going to watch that really carefully. All right, now I want you to do a couple of other things. I want you to look at, XLU, which is the utilities. Very, very oversold. Now, I shouldn't say they're oversold. You don't know they're oversold until all the technicals are down at levels that demonstrate oversold. If the weekly stochastic was not at 30%, but was at 5 or 6%, that's different. If you're looking at the MACD, yeah, that is looking very poor, but at this point, it's not quite oversold yet. But it is getting to a point in time and price that says this is really important. If there's not a good rally in the S&P Select Utility Spider Fund after that peak F top, which coincides with the monthly peak E in the monthly continuous contract, you got to be careful. And that's suggesting that the utilities need over the next 3 weeks to start establishing the 142 to 141 without going lower, without breaking to 39s. 40.07 is the key August of last year support. This is the parallel that I want to look at. And I even drew it in. I didn't put in the exact right side time frame. So let me just do that now. So space to the right, let's call it 14 just to have a little bit of room. Let's go right here. That was from there to there, is there to there. Oh, we've already gone by it. Let me do that one more time. From there to there. Yeah, that's it. Very important. So that says in the weekly chart, this week or next week, we can give it a little extent. No. Sorry to take the time here. I want to do this as accurately as possible. The plumb line is what I'm looking at. And the plumb line suggests right there. Okay? Plumb line suggests that we could go to right there. Got it. Okay, we could go to the first week of July is the second week of July, the week of the 17th. And that says if the XLU has not taken out this low right here of 41.90, that's going to be a positive. But if it takes that out, immediately you can draw a trend line in that says the Chapman wave inside wedge trend line is going to go right to the week of the 17th. And the support that would be very important this week, that's tomorrow, would be 41.90s. And if it's next week, it's 41.80s. If that gets taken out, we're going straight down to that 40, just on the 41 level. I'll be right back. Basil Chapman, Tiger Technicians Hour, and we're going to got questions in the den. We'll try to answer them in a moment.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Yep, don't forget, Daryl Martin comes right up. Look at these H patterns. The lowercase h that goes to lowercase m in the E-minis. There's S&P 2-minute chart, and here's the E-minis themselves in a 2-minute chart going to a peak C. But it's making the H pattern, and that's going to be very important. Why? Because if the E-minis start to take out 2107, there's a real good chance it's going to test the low. So far, that low is 2105.75. Double bottom that started off this morning at 2211. So we're going to be watching that. If it breaks above 2111 by 25 cents, that in fact could start leg D. And it's saying, hey, I've got a rising, don't forget me, I've got a rising trend line right here. Look how easy you can take one line and it gives you so much information. And it says that this rising trend line is going to be very important. Why? Because a break below it would be that 2108.50s area. So we're watching the E-mini. In the meantime, back at the ranch, let's go back to what we were looking at. I had an email saying that Mike has left side, right side price time match going to 1 o'clock on the, was it 120-minute chart? Yeah, I have something slightly different. I've gotten the breakout to leg C. Now, what's important is in the Chapman wave, you always expect a D. except when you are underneath a previous peak of importance. And in this particular instance, that peak goes all the way to the high of at noon on the 1st of June. So and that price was at 21.20.75. So this could turn out to become, and that's what I think is going to happen, an H pattern right there. A lowercase h. Could go a little higher, could go to leg D, that's fine. I've got this going up until 22, until 22 is what? Why am I forgetting that? 1 o'clock. Also 1 o'clock? No. 22, 10. Why am I messing up here? 8, 12 is 10, 2 is noon. So yeah. So it's got another 1, 2, 3, 4, 5, about another 4 bars to go. And that's the 120-minute chart. All right, let's go on. And I just wanted to do this real quickly as we're about to wrap up, because you got Daryl coming on. Should be a fabulous show. Oh, today should be a good show. After yesterday's spectacular move up and down, especially up. And today, the same sort of thing happening in mini. Let's see what's going on there. So let me do this. VIX index. The VIX index plummeted from the peak D that was made yesterday. That's so interesting because some of the inverted tools like the DOG turned around from a peak D. That's 100% short the Dow. And look at this. Very quick A to B to C to D. And what's the rule in the Chapman wave? When I'd expected a pullback, but not so deep. That went from 1550 to today's low of 1271. I mean, that is huge. 3 points is what, 28%, 32% or something like 22%. That is big. So what I'm expecting here is that Friday becomes even more important. There's going to have to be a whopping move in the VIX index to even recover, to help that weekly chart at least close above the 9-period exponential moving average, and that's a 1334, but that's not good enough. You really need to close somewhere in the 14 area to 1430 to kind of repair some of this damage. That's on the VIX index. Now, we are hostage to Greece. I don't think it's really Greece. It is partly Greece, but there's the rotational correction has gone on. And what I said to subscribers today is perhaps the big mistake was that I should have just said, hey, this is really, instead of a very large arch formation, let me squeeze this, a large arch formation, we're really in a rectangle trading range. And when we get up into the 18,250s or something, that's where we're short. And we get right down back into the 17,700 area, that's where you want to buy. And until the parameters, the borders get broken of the rectangle formation, you're going to stay in the trading range. I think we're getting close to pulling out of this trading range. Now, you stopped right at this downtrend dashed line. We're going to be watching this closely. So watch the volatility index and watch a give back that closes down today negatively will start to change this particular pattern back to negative. Right now it's holding right in the middle. It's kind of neutral. Hey folks, I'll be back tomorrow. Have a great day, and yes, good trading.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.